All right, thank you everyone for attending this short little webinar. What we're going to talk about today is the direct payments to dairy, crop, and cattle producers under the Coronavirus Food Assistance Program, or CFAP. So one thing important to get out of the way right off the bat is the information that we're presented is based on our interpretation as of today and may change as USDA provides additional clarification. As kind of mentioned before we got into the program, language, commodity definitions, and inventory sales categories will need to be clarified by the USDA. The first thing I kind of want to go through real quick, and this isn't really important in terms of how producers will get paid or the money that they'll see, but it is important to point out that there's two pools of money that are coming to end up funding these direct payments to producers. The first is the CARES Act, which has $9.5 billion in it. The second is the CCC, which has $6.5 billion. It does still only require one payment application, and one payment amount will be issued by USDA. Now, that one payment will be broken into initial payment of 80% after they've processed the application, and 20% will be at a later date that is currently not defined. The big thing right now is with the inventory and sales records, they are farmers and ranchers that have to self-certify. So they have to declare that inventory or sales, and then if they do need to provide additional documentation, be able to justify that to USDA. I mentioned USDA implementing agency. I'm not going to talk about specialty crops at all today. It's just going to be our non-specialty crops, dairy, and a little bit of livestock. So the sign up will be with FSA. For the specialty crops, AMS will be assisting with FSA. So in order to end up getting these payments, each producer is going to have to submit a completed CFAP application, either in person by mail or at the county office or online. So one of the things, as we mentioned earlier, is that FSA offices aren't having in-person meetings. So again, it'll either occur on the farm or it'll occur over the phone or through a web-based source. One thing that is important to note, most of our row croppers and dairies and a bunch of our cattle people will have all their information already loaded at FSA, but if you do have somebody that is new or hasn't participated in FSA programs before, there are going to be additional forms that are required, and that's on that farmers.gov website. If supporting documentation is requested, then you will have to end up having producers submitting additional records. In terms of timeline, USDA will start accepting CFAP applications as of May 26 and will conclude on August 28th. That initial payment is going to be 80% of the calculated CFAP payment, and it'll start getting out to producers in early June. The final payment will be issued at the discretion of the secretary, and so it'll probably be later on in the summer or fall as funds are available. This is another one that's kind of important. Producers who are approved to participate in the program need to keep that supporting documentation for at least 3 years after the approval date in case they are audited or the USDA requires additional verification. Eligible commodities. I'm not going to read through all these lists. In terms of our crops, corn, upland, cotton, soybeans, eligible commodities on the livestock side, dairy and cattle. One thing that is missing for those out in West Tennessee or Middle Tennessee where there's a lot of wheat acres, our wheat is not eligible for these payments. So again, there are certain wheat categories, but our soft red is not eligible to end up receiving payments under this program. Producer eligibility. All you have to do is fill out a CFAP application and make sure that you have all your other required information already on file with FSA, or fill out the supporting documentation. And you must have an ownership share in one of the eligible commodities between January 15th all the way through May 14th. I'll step through kind of some of the differences on a commodity by commodity basis that producers are going to want to end up considering. Payment limitations. First thing to point out, these provisions are separate from other payment limitations established by the 2018 Farm Bill. There is a CFAP payment limitation per legal entity of $250,000. So that covers all commodities that are produced by that legal entity. This limitation applies to the total amount. So again, you take all those aggregated commodities. Charlie's going to show a really useful spreadsheet that we will end up making available to end up calculating whether you fall under the appropriate limit or not. There is one exemption to this payment limitation, and it's a special limitation for corporations. So again, this is going to apply to maybe some of our larger farms that are out there. So corporations, limited liability companies, and limited partnerships, based on the number of shareholders, it can't exceed 3 who are contributing substantial labor and management, each provide at least 400 hours. So again, the way that we're reading this right now is if you have a corporation with 1 shareholder, your payment limitation is $250,000, 2 shareholders, $500,000, 3 shareholders, $750,000. What has not been clarified, and the way that it reads right now, is that it doesn't matter if you have 1 shareholder that owns 98% of the corporation and 2 that own 1%, it would still be the $750,000. That may get clarified or modified slightly when they end up doing some of the final rules, I guess. But as of right now, that's the way that we're reading it. If you have a payment that is calculated for a corporate entity and those payments exceed the applicable limit, then there's a reduction that is attributed to all members of that entity. There is average adjusted gross income ineligible for a payment if AGI, using the average of 2016, 17, and 18 tax years, is more than 900,000, unless at least 75% of that person's average AGI is derived from farming, ranching, forestry activities. Other requirements, general requirements that apply to other FSA-administered commodity programs also apply to CFAP, including compliance with provisions of highly erodible land and wetland conservation. There is no requirement to have crop insurance coverage or coverage under other programs to be eligible for participation in CFAP. The other one that I should point out is if you do have producers that participated in the payroll protection program or EIDL program, that does not preclude them from receiving CFAP payments. Prices used to calculate payments, and again, this is more specific to non-specialty crops. But again, payments in general are provided for commodity and livestock losses due to a price decline of greater than 5%. That is why our soft red wheat was not included, is over these time period that's defined, we did not see a decline in prices of greater than 5%. So for most of our crops and livestock, what they ended up using to determine each price decline is the weekly average of the nearby futures between the average for the week of January 13th through 17th and the average of the week of April 6th to 9th. This really isn't all that important. It just basically set the parameters for the eligibility and factored into how much they ended up calculating the payment rates at. In terms of inventory, and this is where there's going to need to be some substantial clarification as what is eligible and what is not eligible, and we'll get into it in a little bit later. The producer's self-certified production for the commodity includes non-specialty crops, dairy, specialty crops is based on their own production records and sales records. Producer's self-certified inventory, again, is based on their inventory records. So examples of supporting documentation include anything from production or inventory reported, copies of receipts, ledgers of income, income statements, deposit slips, veterinary records, registered tapes, invoices. You can go through the entire list. Essentially what they want is they want documentation of, 1, your holding of inventory at specific points in times or specific ranges, and or sales receipts of commodities that are eligible for payments over the defined interval. We'll go through those defined intervals. There are some uniquenesses between our crops versus livestock versus dairy, and we'll kind of step through that real quick. So for dairy, payments using funds from the CARES Act will be determined by multiplying a producer's milk production for the first quarter of the calendar year 2020, and then payments under the CCC Charter Act will be determined by multiplying a producer's milk production for the first quarter and a payment enhancement factor to account for increased production in the second quarter. Again, one thing, I don't want people to read too much into this. It's really not important in terms of what the producer will receive, where these monies are coming from. And I'll show how you kind of can estimate that payment without having to kind of get down into the weeds of where money is coming from and how it's being allocated. So again, this is kind of just the nuts and bolts of how these programs are going to work. What's probably going to be more interesting to most people is just kind of what the payment rates and what some of the estimated payments are for production levels is going to end up being. When you look at livestock, payments will be made under CARES Act funds by multiplying a payment rate per head specified by species and classes. There's going to have to be some substantial clarification on some of the classes and what is and isn't eligible. But this is by volume of sales occurring between January 15th and April 15th. So this is where things get a little bit different. It's the reason why we have kind of these two different programs have to be separate out into CARES and CCC. You'll notice that the CARES Act funding is based on volume of sales between January 15th and April 15th. The CCC funds are made based on inventory numbers. So again, the first portion of the payment is going to cover sales. The second is going to cover inventory, and it's the highest inventory number between April 16th and May 14th. We'll step through a quick example of how this would potentially work. In terms of crops, eligible inventory for the purpose of non-specialty crops is the lower of the self-certified unpriced, and that is a key word, unpriced inventory that an eligible producer has vested ownership in as of January 15th, 2020, or 50% of the eligible producer's 2019 production of that commodity. So if you have producers that have more than 50% of their 2019 production unpriced, they will be capped at whatever that 50% amount is. I don't anticipate that there will be the majority of producers that will have more than 50% unpriced as of January 15th, but I am sure there are going to be some out there, particularly in West Tennessee, that may have substantial stored crop. Particularly that January 15th time period is a little bit challenging, because I know a lot of people move a fair amount of commodity in that first month. So again, when they moved it is really, it's an arbitrary thing, but at the same time, it's going to be really important to figure out what you have as of that specific date, because this is a point in time. And there's obviously some flexibility in that in terms of when you had the sale. So again, when you look at receipts, you know, dates are going to be really important for all of these. The unpriced inventory means any production that is not subject to an agreed upon price in the future through a forward contract or hedged or anything like that. So again, there's going to have to be some clarification on this. You think of something like, say, a basis contract. That is a contract, but you're not locking in the full commodity or the full price. So you still are subject to price risk. The way that we're currently reading it is that if you have an ownership stake, you have to have an ownership stake. So for cotton people, that's going to be important. And you have to be subject to price risk. Now, again, when you have a basis contract, you do have a contract, but you're still subject to price risk. So those bushels we think might be eligible, but we need clarification from USDA. When we look at the actual rates, these are the rates for the individual commodities under the two programs. Again, it'll only be one payment that will be issued to the producers. And we'll go through the formulas. This is just kind of a summary table of how we end up having the different payment rates estimated. So you can see for our row crops and for dairy, what the CARES payment rates are and the CCC payment rates, and then what the inventory is receiving payments. So again, Andrew mentioned this when we were kind of chatting before the program. When you look at that CCC payment rate, so again, the one that's paid on inventory, it's the same across all animal classes. When you look at the CARES rate, there's some modifications there based on what the animal class is. So, quick example for row crops. Again, just to clarify this, it's self-certified, unpriced inventory that is harvested but held in inventory as of January 15th, 2020, and it cannot exceed 50% of the 2019 total production. So again, if you had 200,000 and you have 150,000 bushels unpriced, you are limited to 100,000. You had 200,000 bushels of production and you only have 25,000, you would be eligible for the payment on the full 25,000. And then again, you have the same thing for the CCC payment. So how this would work for corn is if you had a producer with 10,000 bushels, you take this is a payment multiplication factor of 0.5 times that payment rate for the CARES Act plus the CCC component of 10,000 times 0.5 times the CCC payment rate. So you'd get a total of 3,350 or 33.5 cents per bushel. So again, when producers go in, what they're really going to be looking at is this 33.5 cents per bushel. That's what they're going to get paid on this unpriced inventory. This is kind of just getting down into the weeds on how that calculation is done. What a lot of producers are interested in is this, is this 33.5 cents per bushel. Now again, there's a fair amount of confusion out there, and I expect USDA to come out and clarify it. I don't expect them to modify this, but again, that is something that we are likely to see as USDA come out and potentially make some clarifying points, maybe even some modification. The initial payment that the producer will receive, and they're hoping to get these out in June, so reasonably quickly, will be 80% of what this total amount is. You step through a cotton example, again, unpriced inventory only that you have an ownership interest in. So again, if you have 48,000 pounds, similar process, only it's 9-cent payment rate and 10-cent payment rate. So again, what you end up essentially getting is 0.095 or 9.5 cents per pound is what the payment rate would be on unpriced cotton. Again, this one is kind of important because I have spoken with a few people out in West Tennessee where there are some producers that have more than 50% of their 2019 crop unpriced. You would have to reduce the amount down to the estimated of 50% of the 2019 production for that individual producer. For soybeans, same thing, similar payment rates, but what we're looking at is 47.5 cents per bushel with that same payment rate or payment maximum restriction on the inventory applicable. To dairy producers, again, for first quarter production multiplied by the CARES Act payment rate, first quarter production multiplied by a payment factor in the CCC rate. So again, you take your 100-weight production for the quarter. So again, this is specific to the first quarter, so you'd have to take the production from January, February, and March, and then you'd end up multiplying it by this 4.71 and end up doing the same thing for the payment factor and the payment rate for the CCC. Add those two together, and what it boils down to is about 6.2 cent or $6.20 per hundredweight. Initial payment of 80% of this total. So again, that's kind of how it's calculated for dairy. You will see some differences. This is a little bit more straightforward calculation than the row crop. So I think there's a lot less chance of making a mistake in terms of how that is interpreted right now. But again, this is how we're seeing it. On the cattle side, cattle are going to be I guess probably the one where there's going to be some additional challenges, and I'll let Andrew chime in here after I'm done, because I'm sure he's got some additional information on what he's seen and what some of his concerns are. But again, there's the two different inventories that are being factored in here. The cattle sold by class, I'm going to only use one class under this example, but between January 15th and April 15th multiplied by the CARES Act payment rate, and then unpriced cattle inventory between April 16th and May 14th. Again, that's the highest inventory level during that period, multiplied by that CCC payment rate. And again, it's important to point out that the inventory held between April 16th and May 14th, the CCC payment rate is the same regardless of the category. So in this example, what we would have is for feeder cattle greater than 600 pounds, if you sold 10 head, it'd be multiplied by $139 a head for $1,390. And if you still had 10 head in inventory at 33, that'd be additional $330. Now, these two numbers don't have to be the same, obviously. We could have 10 head sold here and we could still have 50 head in inventory. It's just the way I set up this problem. So again, what is really important in my opinion is what we end up putting in terms of this eligible inventory number for across commodities. And again, it'll be 80% in an initial payment and 20% at a later date of what this estimated amount is. So just kind of some concluding thoughts. The biggest thing right now that I think is going to be incredibly important, because sign up starts May 26th. get the documentation together, production, sales, and inventory records by commodity and by class or category. There's still going to be some categories that need to be clarified. But what I would encourage is to make sure that you have very complete inventory records. If something is determined as ineligible for payment, and I'll give a quick example of that, is if you have steer dairy calves, as it reads right now, the verbiage would indicate that they are eligible, but there are some indications that they may be deemed ineligible by the USDA. So again, getting those inventory numbers and having them ready to go if you are going to end up submitting, I think is a very important first step. The other one is having that documentation to indicate priced versus unpriced. There's going to be some challenges in making sure that we adequately or accurately have those estimates. Pay attention to cattle weights. Obviously, there's different payments for different weights. So again, you have to make sure that those inventory numbers are divided into different categories. The other one is there's been no clarification on the potential for double counting. And what I mean by that is if you had an animal sold in between January 15th and April 15th, the one producer would be eligible for a payment under the sales, and then the person that purchased it would potentially be eligible for a payment under the inventory at the April 15th to May 15th level. As of right now, we're assuming that that's going to be okay. But again, that's something that may be clarified down the road. But as of right now, there's nothing that would prohibit that from what we've seen. And the big thing is, again, there's going to be additional details and clarifications that the USDA is going to need to end up providing. And so we'll have to wait and see to finalize some of these questions. There's some questions that we can probably answer, but a lot of it, again, I'm going to caveat with the fact is this is how we're interpreting it right now. The ultimate decision rests with USDA and how they end up implementing their programs. So with that, I am going to stop sharing my screen here. And I am going to allow Andrew to clean up anything that I missed in terms of what he would like to say on the livestock or any issues that he potentially has seen. And then I'm going to turn it over to Charlie to show the spreadsheet. So Andrew, go take it away.
I think you covered it pretty efficiently. The one thing I will say, and this is mainly towards the livestock, because anybody that does crops, they report their acres to FSA. I mean, that's, it's just pretty consistent. I would say 99% of people report their crops. What doesn't happen is people don't report hay and pasture acreage. And so a lot of those people are not going to be in the FSA system. And so that's going to require them to fill out a lot of additional paperwork. And that paperwork is already available to start filling out on the website, the CFAP website. So it's going to be integral that, and the reason why I say that is because we found out there were a lot of people that were not certifying hay and pasture acres. I think it was in 2016 when several of the counties in the state became qualified for the drought payments through FSA for pasture and hay. And so a lot of people were willing to pay the $100 late acreage certification charge because they were going to end up, with a $11 or $12 or $1,300 payment. But the point in that is there's going to be a lot of people from the livestock standpoint that do not have their information in those systems. So need to get those people lined up quickly. One of the early things they said was there's going to be plenty of money. Well, evidently they're thinking there's not going to be plenty of money, or they wouldn't just be making an 80% payment just to begin with. So I would say sign up early, sign up fast, and get your money in the first week of June.
Okay, thanks, Andrew. Charlie, if you want to start sharing your screen, he's going to kind of show a quick tool that he's developed to help with some of the payment limitation estimates that are out there.
You gotta let me be a host. Make me a co-host so I can share it.
Okay, just and again, I'll remind people, please type in any questions that you might have.
So right now I see Les's comment about the slaughter cows. On the USDA call on the first day it was released, would it be Tuesday? On the afternoon call, they explicitly said that cull cows from the dairy side do not qualify for the livestock side. There was no comment about the steers, and so that's why we assume that it's still available for those people that are going to sell the steers, because they're never going to dairy production, obviously. So as we read it, they're still eligible for the livestock side.
Okay, and there was one other question. Jonathan sent me one. Is there anything for poultry producers? I have not seen anything. One thing that I will end up saying, and I didn't spend any time on the specialty crops, but there is an additional provision where they held back 4% of the money for crops that will be determined later. And so again, we don't know what those are going to be. There will be a notice of funding that will be distributed if there are crops added. And the questions that we got yesterday was, is there anything in it for hemp or tobacco? And the answer to that is no. We can't definitively say that it will remain that way, but again, that will have to be determined, because there is still $647 million for other crops that aren't currently classified under row crops, livestock, or specialty crops. So what falls in there is going to be interesting. The other one that we are awaiting some degree of clarification is horticulture. And again, I don't have anything else to really say on that. There is going to potentially be some payments under that, but in terms of details, I do not know what that's going to be.
I can share my screen now, Aaron. I'm good to go.
Okay,
Ready?
Milton, Milton, let me know if Charley, if after Charley's presentation, I hope this will answer that question that you put in there. But Charley, please share it, and I'll turn it over to you.
I need to give Milton $5 for a good segue for me. It was on perfect cue. Send me your Venmo. Let's see here. So can you see my screen?
Yeah, you're good.
All right, perfect. So it's pretty simple here. It's an Excel spreadsheet that we started putting together as soon as it was released. We try to get out ahead of it so that our producers can use this before they get to the application side of things and have other questions. So, of course, what you see is just a simple cover page right here, simply stating that's a tool, not necessarily an absolute also. But as you get down in the bottom here, we have all these tabs. And so each tab, we have one for total value. So that's the first one you'll see, and that's step one. And then you also have your non-specialty, your wool, your livestock, dairy, and specialty. Don't worry about sheet 9. Sheet 9 will be hidden from you as a producer as for our macro stuff. But so don't worry about that. So step one essentially is we need to know how many owners are part of the enterprise or how many shareholders. And I put the definition from USDA right here on the right. Very wordy, but just for the simple fact that if you have a question, there it is for you. But I think most of us will probably be one, if not two, in the enterprise. And so here you'll come down and just select how many you have. So the difference between 1 and 2 is obviously this limit changes as you start increasing. So it's 3 or more, you have a limit of 750,000. So I could put a 3+, but they don't count for that. And so then as you get to your limit, I'll just say I'm a good farmer. I'm by myself. And so I have my total value that I can get from the payment, and then I have the total value calculated, and we'll get there in a minute. But anytime that this number is at or below my total value, it'll be green. If it goes over, it's going to turn red to show that you're over. And then I also have it put where you have your initial payment, which is going to be the 80% that you get when it's approved. And then the remaining 20% is here. As Aaron and Andrew kind of said, the definition of the 20% is at a later date. There's been no clarification or definition of what a later date is. So for now, you have your remaining money out there. So for here, I kind of plugged in what Aaron's examples were so that you could see it. And so you would just come up here and type in however many bushels of corn you had. And he had 10,000, so I left that in there, and it'll crank out the payment for that individual commodity. Keep in mind, an enterprise can cover different things. So you could be doing corn, cotton, or soybeans, or whatever. So it'll all combine it together on this side of things. And so here, this box will be right there for you to tell you how much money you got. It's going to be green because it's money, so I left it as green. And then so as you work your way, yeah, again, you have wool, you'll have livestock, and Aaron went through a little example right there, but I'll type in something. Say we do have cattle, and we sold some cattle that were light during the first part of technically would be the CARES Act payment. Say we sold like 20 head there, so we'll have 2,000 coming off that. Well, then I said, well, I sold some last week because the prices started. I was listening to Andrew, and the prices were starting to sound pretty good. So I took some cattle, and I sold 20 more. It's just going to be the 20. This will be actually a number, not a dollar sign, but it'll be the 20 head times 33, all added up right there for your feeder calf side, and it'll have your payment right there on the bottom. If you have dairy, same kind of thing. You just enter your hundredweight right here. And specialty, there's a lot of those, and so they're actually category. So there's all three categories. If anybody on here is doing specialty things, keep in mind when I say specialty, tobacco and hemp are not listed in the program. So if you're a tobacco or hemp producer, as of right now, there is none, no payment for you right now. But all those boxes that are at the bottom, they're going to add up into here. So I have it rigged up to where it'll add up all of the total payments for each section of your enterprise, and it'll come right there. And that's what you'll be looking at. And then when your application's approved, this will be the amount that you get initially. And then of course, like I said, the 20% that's left at the table for the next time, it'll be right there so you can see the difference. Right now, this tool is about finished and complete. There's some little things I got to tweak on it, but it'll be sent out pretty soon, and hopefully by this weekend, producers can have it so they can start trying to figure out their payments and get ahead. As Aaron said, I think time is a priority right now for all the producers, and sooner that we can get applications, or as soon as we can get our inventories and we can get an application in, hopefully this tool can help you understand what to expect. And I kind of been watching some of the USDA. If you do it online, I do believe they're going to have an online version so that you can apply online. I've tried to rig it up to where these inventories and these counts will match and mirror what they have, so that way you don't have to do it twice or do it on a different, think differently or try to figure it out. You already know what to do, so you can hurry up and get in line, because if it's anything like PPP and the EIDL programs, money's going to come and fly out, and it's going to be first come, first serve. So I don't want to have our producers behind other people. But that's it.